We have Deutsche Bank's Brian Modoff joining us from Austin, Texas. He's a top-ranked analyst on Cisco, returning 12% on his calls to his clients on the stock this year. Brian, are you looking at Cisco Systems and the shares tumbling right now, 7.5% in after-hours trade? So it looks like the markets were pretty disappointed in these figures. What about yourself?
The figures were a little light on the revenue side. On the earnings side, they did come in a penny ahead. The guidance also was a little light of consensus on the revenues, but the guidance is still for 18 to 20% growth. We think the guidance is reflective of the CEO being somewhat conservative, given conversations he's had with his customers who are a bit more reserved with regard to their near-term view of the economy. So I think this is more macro-driven than the company. Keep in mind, this is a $40 billion company growing 20%. That's pretty impressive growth for a company its size. It does have a number of new product initiatives in routing, the switching, in data center, mobile, as you mentioned earlier, as well as video conferencing that are good growth vehicles for the company. So we do see some good growth prospects, but again, we think this is more directed by cautious comments from Cisco's large customer base.
Yeah, that's right. You're talking about macros here. We just heard the CEO on the Cisco analyst conference call saying that he sees an unusual amount of conservatism and caution right now in the market. So what does this mean for corporate spending? We have Goldman Sachs predicting a 4% spending, which seems pretty dismal on these, I guess, these routers and these switchers on infotech equipment. So what does that mean for Cisco going forward?
Keep in mind, we're still talking about double-digit growth in switching. For Cisco and for the industry, it's still a growth area. Routing's high single-digit, so there's still some growth there. In addition, there are new initiatives that companies are investing in to create more efficiency out of their own businesses, like video collaboration, where instead of flying employees all over the world, they can actually have meetings and work on meetings and PowerPoint presentations concurrently from disparate places in the world. So there are some things that can help companies save money. So Cisco can certainly drive their efficiency with their equipment.
Okay, if you look at the analyst calls on these shares, Brian, we have zero analysts telling investors to sell off Cisco shares. So there is some sort of optimism here. What about you? You have a buy rating on the stock. Are you going to keep that call? Are you going to keep your target price?
Yeah, obviously, we'll be evaluating that tonight. We have a buy rating. From what we saw today, there's nothing to change that. We think the company is executing very well. They also have a lot of cash. They are approaching the business very systematically versus some of the competitors who are pitching point solutions. We think that's allowing them to gain share. And we think the stock is attractive at current levels, particularly with the sell-off this evening.
Okay, Brian, nice talking to you.